got Soni Patnaik joining in as well as Nooresh Merani on the chart. So let's get straight to it. And Soni, would just like to begin with you and get in your take. Clearly, the sell-off has intensified over the past many days, and that has led to quite a bit of nervousness. A lot of large caps have borne the brunt of this sell-off, but the broader markets haven't been spared. Is there a sense that this trend is only going to continue?
Good morning to all. Thank you for having me on the show. I think today is going to be quite important because there has been multiple times in the past where we've tested the lows of 21,800 as a support. However, the weekly closing has always been above 22,000. So the same sort of importance and significance is going to hold even for today, being a weekly closing. If Nifty is able to close above 22,000, then it may give you some immediate short-term relief up to 22,300. However, if it breaks and the closing comes below 22,000, then we may have some more caution and downside levels left. So in any case, if it's closing below 22,000 on a weekly basis, there could be a sense that it can break the support of 21,800 and head towards 21,400 for the week as well. Important to understand is that the FI's longs positioning have dropped significantly from 45 odd percent. It has come down to 33%. If the longs go below 30%, they can drop till 15% as well. India VIX is rising. It's above 80 now. That's also indicating at an enhanced volatility. And yesterday, we've seen aggressive short built-up positions taking place in Nifty and Bank Nifty, and it's quite aggressive to the tune of 14%, 9% respectively. So in any case, the resistance is there for Nifty around 22,300. Any short covering can only come above it. But as of now, it's better just to stay hedged in the indices. And when it comes to stock-specific approach, it could be the right way just for the heading week.
Okay, Nooresh, hi, morning. Any signs of a recovery? This morning, the global handover is decent and even the Nifty implied open seems like some bit of green, at least to start off the day is par for course.
So, if we look at the markets, we are down, say, 3.5% from the top. But why are we also worried? Because the fact is, in that same period of last 5 sessions, we've seen all the global markets do well. Yesterday, we had a new all-time high hit on almost all European indices. You have DAX, FTSE, etc. Then you have United Kingdom actually making a 6-year breakout. At the same time, you have S&P 500, which is just 1% away from the last all-time high. Say US Dow Jones indices up, say roughly 1 to 2% away, but they are all up 3 to 4%, and we are down 3.5%. So, and in the same period, we've seen one of the highest selling on a daily basis by FIIs. So it looks like there has been some rejig which is happening on the FII side, and the fall has been very swift. Now, in the same period, it is very rare we've seen that Indian indices go opposite to the global markets. We've underperformed or outperformed. So now we watch out for the supports. Now, 21,700 is the support which was held previously, and 21,800 was the one in April. So roughly that band today, if it holds on, that's an indication. And over the last 5 sessions, what we've noticed is every uptick in the day has been sold into. So if we start seeing a recovery beyond 100 and 100, 150, 200 points, that would confirm a bottom is in place. So my view is around 21,700, 800 will look out for a recovery, but a confirmation comes when we've already seen an uptick. And if that happens, we could actually play a catch up to the whole world. So time to be very cautious on the short side. The long side is post price action.
Okay, be cautious on the long side. That's the word from Nooresh.
If you like this video, then like, share and subscribe to ET Now.